Nvidia reported some big numbers, and I have an idea what's going to happen next in December. Before earnings, I correctly predicted by saying this. Mark my words. What's going to happen is Nvidia will beat earnings, but the stock won't rise too much because expectations are already baked in. So, what will happen next? Let's explain why earnings did not make a really big dent in the stock and why the earnings were so fantastic, yet the stock didn't move exactly as I mentioned. And most importantly, what do we do next and how do we make more money on Nvidia going forward? That's the most important thing in our mind, and that's the most important thing that we care about is how do we make more money in this market. So that's exactly what I'm going to cover in this video. I'm going to show you a couple of plays. We're going to dive into my portfolio. By the way, my portfolio just hit $4 million. As you can see on the screen right now, we have $4,001,000. So exactly as we've been making money hand over fist, guys, bicep over tricep. I haven't hit the gym. It's been a lot of work lately and some travel, so I'm in a new location. But look, long story short, let me just get to the point here. I respect your time. The whole point here is Nvidia had earnings. The stock didn't really rise that much, which is exactly what I thought would happen. So I'm going to pull up Nvidia right in front of you, and I'm going to show you my position here. Let's see if you guys like this format, this really raw format of me filming videos. But you guys already know you get my authentic self no matter what. 141.77, and this stock really didn't pump anywhere, right? So I'm fairly flat on the stock. In this portfolio, I've had Nvidia for ages and ages, but I started a new position by selling puts, by doing covered calls. As you guys can see here on the screen, I have several positions which have all done very well. I mean, I recommended doing 153 and 155 covered calls. Those did not hit in the money. I have the 148 covered call, which is also making money. I have 132 put, which is making money. So there has been several positions here which have been making money. Sorry if I have my fingers in your face. It feels a little bit weird. We'll see what happens with this video's comment. I'm trying a new style here in my hotel. Guys, I'm gonna look at my notes right here, so excuse me if I'm not looking at the camera. So look, I don't think they really mattered for the stock too much, even though they had good earnings, guys. It's all about expectations, and the expectations were already high, guys. So like I'm saying, the most important thing that you need to understand is that the stock market is an expectations game. Nobody actually cares how well the stock did. Nobody actually cares about anything other than what they personally expect, because the shock factor is exactly what makes a stock rise or makes it fall. It's all about emotions. The market isn't really a science, and that's why in my Discord community, when I do my Monday and Wednesday trading sessions, I always say, guys, listen, here's the facts, here's what I see, here's the facts, but here is also my opinion, here's my intuition. Because I've been doing this for 10 years. That's what makes me the top option coach in the world, is I have the biggest experience. And sometimes I do make my decisions based on, hey, I think this is what I'm seeing from other folks. I'm taking an eye, I'm looking at other people, because this game is all an expectations game. It's pretty common sense if you can understand social velocity, which I am always tracking. I'm tracking social velocity very heavily. And actually this market that we're in right now is honestly a purely social velocity and momentum driven market. There's not a whole lot of science going on. If you look at some of these companies, they have really high price to earnings ratios, and they don't always really make a lot of sense. A lot of these Mag 7 stocks actually don't make sense on paper, which is why you need someone, or you need yourself to understand why this company is going up so much. So look, I said I track social velocity a lot, but I also want to point out, and I want to show you a quick clip of Bank of America, Vivek Arya, as he explains it really perfectly. This is going to be a 1-minute clip.
I said, what do you think the disappointment is here? I mean, there was
some... I think the disappointment is that, the supply chain, is scrutinized very closely. It's followed by a lot of people. And every time the company reports, expectations continue to build up naturally for this size and what the stock has done. But there are always constraints when it comes to not just getting the supply, but actually building the products, getting them to customers. And what we have seen from Nvidia over the last 2 years is that they are able to beat their own guidance by $2 to $2.5 billion consistently. Last time they guided $32.5 billion, and they reported $35 billion. So that's why I'm not surprised to see them not exactly come to the high end of where the whisper expectations are. But if I look at the usual range of beats they have, we will come pretty close, I think, once they actually report the quarter. So I think this is more a case of expectations in a transitions quarter. It's nothing to do with the long-term fundamentals of the company.
All right, guys. So look, keeping this video short as possible, I'm going to wrap up with my notes here, and then I'm going to jump into the stock and how I'm planning to trade Nvidia stock. My fingers in the camera shot. Nvidia, I'm going to probably do a couple of things. I'm going to sell covered calls and pretty much continue to run the wheel strategy. And I do have some cash and collateral here. It is before market open, but I am going to open up this position because I am light on Nvidia in my current portfolio. So I am going to open up a position on it. Now, look, to finish up with my notes, I think expectations drive the stock market. Period, hands down, period, end of story, okay? And Nvidia's recent earnings are a textbook, all right? Smiling right here. A textbook example and case, which you guys have to learn and never make this mistake again, okay? I wouldn't call it a mistake because we're still making money with the stock going sideways. But if you bought, a lot of call options, or if you're really aggressive in buying options in the market, that is a mistake, especially for a company that has already the highest expectations possible. Like, everyone is already in the stock. So that's why selling options is so profitable on Nvidia. And I think we're going to get a lot of upward movement on Nvidia. This stock is going to double, but it might take some time. Like, it's late November, right? I think in 2025, we're going to see this stock, basically, it could double. You just can't time it. Don't time the market. Be on the trend. Like, you guys need to get rich overnight? No, you don't. Get rich for sure. Like Uncle Henry right here, we're at $4 million, right? I thought I would hit this in January and February. I hit it earlier. That's what happens. When you ask for less, you get more. When you ask for more, you get less. That just seems to be the case with how life works, all right? So look, Nvidia's success in AI is no secret, guys, and the traders were anticipating that these results would happen well in advance, right? If you look at Nvidia's history, it just continues to beat. So traders know it's going to beat. That's why I told you it's going to beat. I never try to predict too much in my videos, but I literally predicted Nvidia because it's not hard to predict. It's not that I'm a genius. It's just that I have a lot of experience, so I can tell what's going to happen, right? And I can't predict it, but with Nvidia, it was easy. So guys, moving forward, the real opportunity lies in identifying whether Nvidia can deliver unexpected upside, okay? Unexpected, not expected. If it's expected, it's expected. It's nothing special. Unexpected in areas like new AI partnerships or accelerating demand in key markets in the future. That's where I think the answer, if you ask me, can Nvidia surprise again and to the upside? I think the answer is yes, it can. And I think that's why the stock is going to double, and that's why I'm going to show you some specific option plays in just a second. But look, if you want to know how long, I don't know, because that's a fool's game to play. It's a fool's game to play of when Nvidia will rise a whole lot. That's just a fool's game. I just know it will. I don't know when, all right? We're going to have to find a scammer to tell you when. I don't know when. That's just a scammy thing. Nobody knows when. No professional, okay? Now look, I've been in this game for a decade, and money is really easy if you know how to analyze and properly analyze a stock and properly analyze the option. And long term is where it's at because great companies like Nvidia thrive over the long term, right? What happens is they keep growing their revenue because they keep gaining contracts and customers and business, and they keep innovating, and they grab more market share, or the pie is growing, right? All the FANG other stocks are buying Nvidia GPUs. So Nvidia could technically lose a little bit of market share, but if the pie continues to expand and get a lot larger, then that's also fine. That's how a company grows. They just need to make more revenue. Now listen, after revenue, they need to make more earnings and bottom line profits. So that is going to happen naturally, and Nvidia has some insanely high profit margins, okay? Really, really high profit margin. In fact, it's so high that you may see some government regulation down the road saying that it's a monopoly, okay? We don't have to worry about that right now. We are gonna think, how do we make money today? And what's the future look like? Yes, they may have some regulatory issues down the road, potentially, but that's not something to be really concerned about. All right, so relax there. I'm just trying to give you guys an objective view of the good and the bad because I want you guys to have the full picture, all right? So last but not least, here's what we will do. I'm gonna jump into my portfolio and let's go to, I'm gonna sell a put option. I already have a put option that I have sold. I'm gonna tell you what a good entry is. I would probably go for 2 different expiration days, okay? One is going to be December 20th, and the other one will be January. Guys, I'm buying this thing hand over fist, bicep over tricep, all right? I gotta hit the gym a little bit. But this thing is doing really well. It's doing really well, and it doesn't have to go to the moon to make a lot of money. I'm doing just fine, growing my portfolio to $4 million, and a big part of that is just options expiring on Nvidia and just, monthly expirations. So I'm going to sell a put, and I'm going to go for something a little bit more aggressive. Now that earnings have come in, we have had an IV crush, okay? An IV crush, let me explain to you. Lots of education in this video. All right, an IV crush basically is pre-earnings, okay? Pre-earnings. What happens is the stock will have high implied volatility, all right? So when I showed you guys the call options before earnings, if I remember correctly, this is like a few days ago, before earnings, let me go to the option I was looking at, which was the 152 covered call. The implied volatility was, I think it was around 96, if you guys watched that last video, which many of you did. So I think now it has fallen by half, okay? The implied volatility has fallen by literally half, and that's just a function of before earnings, you have one of the highest implied volatility times that a stock can have, right? And that's because a lot of investors are expecting a big move. Because there's an expected big move, implied volatility is higher to account for that expected big move. So the options are going to be like twice as expensive, which is why buying options before earnings can be very risky, but can also be very profitable. It's a double-edged sword, okay? It's a double-edged sword of what can happen. So right now that earnings have already come in, the implied volatility is low, it's less attractive, but it's still high enough to make tons of money. And because it's still high enough to make tons of money, I would simply just stick to the easy wheel strategy that I've been covering for the past 5 years on this YouTube channel. We're about to hit my 5-year anniversary. So I hope that you make another, thousands and thousands of dollars by just sticking to my simple formula of covered calls. All right, so what I'm going to do is I'm actually going to look at the 135. You can see here that the delta is 30. Oh my goodness, I just picked a random option and it happens to be a 30 delta, which is exactly my sweet spot of what I say is my sweet spot, 30 delta. How did I do that? Well, honestly, it's just because an out of the money option that's just a little bit lower is typically around a 30 delta, right? So I just intuitively picked a 135 strike and it happens to be 30 delta. Perfect. Implied volatility, 43. That's pretty good. Implied volatility of 43 is also like a good implied volatility. It's fairly high. The volume is amazing. It's at 8,600. That means that you're going to get filled in this trade fast as a MF, right? Fast as a mother, right? I don't curse on these videos, just trying to make these a little fun today. The volume is 8,600. It's fast. You're gonna get filled fast. Bid ask 335, 340. That's a perfect tight bid ask. That's tight as a bicep curl. All right, that's tight. That's good. The tighter the bid ask, the better, because when it's a wide bid ask spread, all right, you basically are not going to get a good fill. You have to basically play around with the bid-ask spread, and most likely than not, you're not going to get filled for the best rate, which just means that you have slippage costs. All right, that's what I call slippage costs. You're just losing some money. It's like a Ferrari. It's like you're trying to sell a car, a Ferrari or a Toyota. It doesn't really matter. Let's just say a Ferrari. Okay, it's a $200,000 car. You're trying to sell it on Craigslist. Now, I don't know why you would sell a car on Craigslist, a Ferrari, but let's say someone comes to you and then they just say, hey, I buy it right now for $199,000. You're like, dude, all right, fine, right? You're not going to say no. But you see, that's a $1,000 slippage cost, which is, right, it's like, what, 0.5%? Because 1% would be $2,000, and then he just knocked you down by 1,000. So it's a 0.5% loss. It's kind of a big deal, guys. It kind of adds up when you're making many trades over a single month, right? If there's a high slippage cost, you could be short a couple of $100, and in a year, that's a few $1,000s. I mean, it really does add up. So you want a tight bid-ask spread. All right, so I would go ahead and sell the 135 here for December. Now also for January, I would go to January 17. This is the traditional expiration. And for January, I would also, look, you can go a little bit lower. So look, this is the good news with going out farther in time. So you can go lower. So for example, let me pick the 130, and I bet you this is going to be around a 30 delta again, 26 delta. So it's a little bit lower. So you can see how I actually went from 135 to 130, but it's even safer. Like, it's literally even a lower delta. So the more time you give an option, this is why I do like to do monthly trading and 2-month trading, is because the more time that you give an option, the more premium you collect up front. So a lot of you guys that are in that retirement zone that have a couple $100,000, which is many of you guys, and I work with folks one-on-one, and I do Zoom chats, and I just text them back and forth all market hours. That's what my one-on-one looks like. I actually give you my time, and I see a lot of folks that have a few $100,000, and they're easily just selling puts and creating a really solid income source right now in this market, $10,000 a month is easy. It's just easy. Like I have so many students that are making like 8%, 15%, 20% in a month, and it's just an easy market. I don't assume it'll always be easy. There's good times, there's bad times, there's seasons, right? And everything in life, right? And with Nvidia right now, I think we're still in the early innings. I don't know if I can say early innings, but the mid innings, where we're still going to get some more momentum upside, which is why I'm still planning to cover this stock on a very regular basis and keep you guys up to date if you're subscribed to running covered calls, selling puts, and just the wheel strategy. Now, let me tell you real quick about how to run the wheel strategy and manage it. I can show you an example as well. So look, you sell a put, right, on Nvidia at 135 or 130, whichever you personally prefer. One is not better than the other. I just showed you two plays. I didn't click it, but here, let me click it. It's $400 in income. One is not better than the other, guys. They're both fine, all right? They're both meaning that you will have to buy Nvidia at 135 or 130 if Nvidia pops down or declines below those strike prices. Now look, if that happens at expiration, you don't need to do anything. You don't need to roll anything. You don't need to do anything, guys. I'm a fan of doing less and creating passive, safe, consistent income. I see a lot of people over trading, and that's a big mistake. And I teach passive income. So you want to wait until expiration for these put options that you sell. Just hang out, do other things in life. If it goes below, this is how you manage it. All right, a lot of people want to know, oh, should you close it? Should you roll it? No. Listen, when we're selling puts on a high quality company, the whole reason we sell puts is because we don't mind owning shares and we want to get paid to own the shares for a cheaper price than the market. So if you want to manage it or roll it, you just watch too many YouTube videos about, other folks that tell you need to manage it and roll it. They don't really know what they're talking about. What you need to actually do is just to hold the position until expiration, get assigned, and then sell covered calls. You want to sell covered calls above your average cost. So look, on Nvidia, if the average cost is 130, okay, cool. What you go do is then you sell call options. Now these are not going to be accurately priced right now because basically I showed you the 130, and in the future, if it were to be 130, these options would be worth less, right? Just they would be worth less. Like if I were to go down to the 130, it's not going to be worth $17. That's $1,700. It's going to be worth a lot less. Maybe it's $400, $500. Who knows right now. But nonetheless, you want to sell covered calls at your average cost or above. So if you got it at 130, then you're just going to sell 135 covered calls, and essentially you're just going to collect premium. And then if it goes up to 135, it's fine, guys. It's fine. You made money. Okay, you don't need to do too much. If you follow my strategies, they're very easy to print money with doing less work. That's my strategy, and that's what I teach on this YouTube channel. If you guys have questions, feel free to email me down below. I'm going to add my email if you want one-on-one coaching. I am the only and best one-on-one coach on option trading, and I can show you how to make $10,000 or more per month. If you guys want one-on-one coaching, I still have 12 spots left for one-on-one coaching this year. It has been an amazing journey with all my one-on-one students, many of them doctors, lawyers, engineers, but you can be anyone. You can just be a hardworking professional or someone that's close to retirement that wants to create a big source of income, really scale up their portfolio, and just wants to, really learn these strategies. I teach, I show you how to fish, but I also give you fish. So this is the best program that if you want to scale up, especially in these times, I think there's so much money to be made these next 3 months. Like legitimately, I hit $4 million in my portfolio. In this market, we might even hit 4.2 million, 4.5 million in the next couple of months, right? Times are good. So yeah, take advantage of these times, stay safe, invest safe, and thanks so much for watching this video. Catch you guys in the next one.